more on the sector, we have an expert who will help us deep dive into the sector. We have Prithvish Uppal, Vice President, Elara Capital, joining with us to talk more on the insurance play for that matter. Prithvish, thank you so much for giving your time to ET Now. Good morning to you. The first question to you is, what are the key trends you're seeing in life versus general insurance players this quarter, and also which segment, life or general, is better positioned to outperform during the quarter according to you?
Yeah, good morning and thanks for having me. The context, if you look at where life insurance, in terms of the first quarter, there was comes on an elevated base where the industry had grown roughly about 18 base. We've seen some bit of moderation in growth, which has been led by sort of benign demand in ULIP, which has been the driver for the industry. So, given that markets have seen better performance, there is expectation that this product segment could see a revival, but possibly more towards the latter half of the year. In terms of the non-linked savings segment, which is the more margin accretive segment that has continued to do well over the last 2 quarters. This also comes on the back of how the interest rate yield curve shape has changed, making the product segment more attractive for customers. So we are seeing more margin accretive demand in terms of the savings bucket. Within protection segment, that also has continued to do well. So overall, though this quarter was expected to be more benign, where the industry reported about a 6% growth and private players growing about 9%. We're expecting a full year growth of about 11 to 12% for the four private life insurers. And in terms of the margin trajectory, the expectation is that there would be slight uptick in margins driven by product mix, but some companies have indicated that they are looking to reinvest this margin benefit into growing distribution, and therefore we expect margins to be fairly range bound in the 25 to 27% range. Coming to general insurance, so our view is that in terms of motor, there is clearly some bit of slowdown and competitive intensity is on the rise. Industry loss ratios and combined ratios are fairly elevated. And we've not seen motor TP hike, sort of come through. So
I believe we have Prithvish on a patchy line. We'll try and reconnect with him. But well, yes, that was his view coming in on